Good afternoon from Singapore, everyone. This is Vandana Hari from Vanda Insights, and welcome to today's Gulf Intelligence Live webinar on the 8th of March, 2023. I'll do a quick market recap. Let's see, Brent trading around $83.39 as we speak, WTI around 77.54. So crude was buoyant throughout last week and into Monday this week, but it has come under renewed pressure yesterday after Jerome Powell told the US Congress that the Fed is prepared to increase interest rates faster if needed. So now it is not only higher for longer, but also racing to get to higher for longer. But zoom out a little bit on oil markets, and you notice that crude has been relatively range-bound so far this year, with Brent pretty much locked in an $80 to $86 per barrel band. The way I see it, there's a tug of war which has been playing out between the economic outlook and, shall we say, cautious optimism over China. And this tug of war, as of now, seems to be in a bit of a stalemate. So to dive deeper into the factors at play in these markets, I have three distinguished subject matter experts joining me today, and three women I personally admire. So please welcome Maliha Bengali, founder of MB Commodity Corner, Kate Durian, a non-resident fellow at the Arab Gulf States Institute in Washington, a contributing editor at the Middle East Economic Survey, and a fellow at the Energy Institute, and Dr. Sara Vakshuri. And thank you so much for joining at completely unearthly hours for you, Sara. Sara is the founder and president of SVB Energy International. Now, ladies, at the end of this show, I'm going to ask each one of you to share in a nutshell your formula for success, especially for the young men and women in our audience. So you might want to gather your thoughts on that as we move along. But first, the markets. Maliha, I'm going to start with you. Of course, oil markets have had to keep an eye on everything that's going on in the broader financial markets, and specifically everything that's going on with the markets reading of Fed, and what the Fed has been signaling. And I was reading your analysis posted earlier this week, where I think you're quite scathing of the Fed. And I quote from your report, you say, the Fed dot plot is meaningless as they just follow/react to what the macro markets price in. They have no clue and only react, not preempt, and certainly do not try to forecast. So if you could just unpack a little bit of that for us, and also tell our viewers, how should they be reading the Fed's next steps, the Fed's signals, and the market recalibrating on the basis of those signals and steps?
Thank you, Vandana. That's a very important tweet. So let's go back a second. In the last 10 to 15 years, the Fed has done one job. They have printed their way out of any economic crisis or any sort of financial hiccup. That could have been done when the balance sheet was close to zero and inflation was never existent. Now, let's fast forward 20 years into the future. We have inflation averaging 5 to 6%. We have a balance sheet close to $9 trillion. The Fed is doing what it needs to, because right now they're in a catch-22 situation. They know that the economic crisis is a lot worse, but they cannot cut rates as the market expects them to, because if they do, inflation will go to 20%. They also know that if they print more, again, game over. So they have to get asset prices down. Now, having said that, the Fed has always plays a reactionary function, but they always over-ease into a recession and they over tighten into a crisis, right? We've seen how they're backward looking. Their data sort of has a 6 to 8 month lagging indicator. If they were to forecast and pre, which is their job to, I think the market would be a lot better suited. Now, their dot plot, if you look at the last few months, they actually have been following what the bond and rate market priced in. The bond market has been showing distress for quite some time. The bond market prices that the 2-year curve is trading at 5% and the 10 is trading at 4%, implies rate cuts going forward. Now, the equity investors think that the Fed will cut rates this year, but it is not that simple. And that's the big dilemma, right? There's this constant sort of don't fight the Fed mentality, but the equity guys are actually fighting the Fed because they know they're going to come and save the day as they always do. But this time it's very, very different. And the Fed right now is magically hoping that whatever they're doing is actually supported because the markets have not crashed yet. So they're doing their job. But the dilemma right now is the Fed is actually has this magical wishful thinking because they know they can react. They have 500 basis points of rates to cut if they need to. So honestly, I'm a bit skeptical on the Fed because the Fed really has engineered this massive debt bubble, and it's only been in their favor because they themselves don't understand why the labor market's strong. The labor market's strong. You look at the J curve right now, unemployment should be a lot different versus the cycle. They're just doing what they have to, but they're very cognizant that something happens. They need to have the tools to address that. And I think that's where my tweet comes in. So the rates will be high for longer because they got the inflation wrong. And we have secular inflation. This is not just inflation because of COVID. We have secular inflation in the system. Supply lines are changing. So we're in a higher for longer environment. The bond and rate markets have accepted that, but the equity market investors are very, very complacent about the fact because they're used to buying the dip. I think that's where the dilemma is it comes in.
Yeah, Maliha, we've also seen crude not simply reacting to the Fed's interest rate and the dot plot and whatever projections, economic projections, and so on, but we've also seen crude quite sensitive to the market's fight against the Fed, as you say. You know so we had the pivot party going on pretty much until the mid February, right? And that gave quite a bit of impetus to crude. So should oil market participants be prepared for this ongoing tussle between what let's say a dovish pivot view or whatever the market expects of the Fed and what the messaging that the Fed sticks to?
Right. Now, commodity markets at the end of the day are all demand supply led. Macro is very important as it dictates the global demand scenario, but supply is very important as well. Now, let's go back a second because last year supply was tight, but we've always said supply was tight in a very short window. The bull thesis of this year predicates on China coming back and rebounding the magical 2 million barrels per day. But China has reopened and the demand numbers, we saw the import numbers actually 1 million barrels per day lower than the November-December number. So China has been very smart. They've restocked everything they needed to for this reopening. So the people are waiting for China to reopen. China demands return, but then US and EU demand. We're going to a recession. So our forward-looking indicators look at demand on a global basis as to what. So yes, demand in Asia is strong, but demand in our parts of the world, EU and US, is actually quite weak. So end of the day, the oil market is very well supplied for the time being. So obviously, if recession plays out, and we think recession is going to play out pretty strong in the second half of this year, the demand's going to keep falling and supply is catching up because now it has had time to catch up. So the macro is important, but end of the day, commodities are run by demand supply inventory balances. And I think that's what dictates most of the furrow.
Yeah, I'll get back to you, Maliha, on the China demand question, but let's bring in Kate. Kate, I would be remiss if my first question to you wasn't about this Wall Street Journal report. Last Friday, I believe. Did I hear a groan there?
Yes, because of where I am, it's a very sensitive issue. Yes, I know the Wall Street Journal.
Yeah, but look, Kate, to be fair, the market participants need to understand how to. I mean, this wasn't the first time. And for those who didn't follow the story closely, I'm referring to a Wall Street Journal report out last Friday that about renewed or heightening tensions between the UAE and Saudi Arabia, and saying that the UAE was thinking of leaving OPEC. This wasn't the first time such a report had popped up, and I would think it's probably not the last time. But was it a storm in a teacup or a sign of a big fallout to come? That's what I was going to ask you, Kate. But whatever you feel comfortable to share, because I think this is something the market does need to get its arms around.
I mean, what I've noticed sitting in Dubai is that, normally you would expect to see more reports of, telephone calls between the two leaders or the Crown Prince and Sheikh Mohammed bin Zayed, and, visits and so on. So yes, there were a few signs that people interpreted maybe as showing signs of tension, but, these are neighboring countries. They've had their ups and downs. Remember, we had the big dispute over baselines. I think that's sort of still bubbling beneath the surface. whether the report suggests that the UAE may again be thinking of leaving OPEC. And don't forget, UAE is going to host COP28 later this year. And I think, if you listen to what the incoming COP president, Sultan Jabir, is saying, it's very much a focus on listening. Yes, we are expanding our production capacity, but also investing in renewables. We need to decarbonize, et cetera, et cetera. So, I mean, it's understandable that there will be disputes. Obviously, Yemen has been another area of dispute between the two. But you sort of figure that, as the two biggest economies in the region, they will at some point. Yes, there is competition, obviously. But you get the impression that things will be resolved amicably, because this is not the time, to have disputes, and it's a very sensitive issue. And I think sometimes, if you read the Wall Street Journal, you find that a lot of messages are sort of conveyed through this newspaper particularly by Saudi Arabia, when they floated this balloon about maybe taking payment in Chinese currency for oil, messages that are really directed at Washington. So, I don't think it's a storm in a teacup, but I don't think it's as serious as to sort of result in the break that we saw, like with Qatar, a few years ago.
Yeah, indeed. And I think you mentioned a very important point there, Kate, about the UAE's stewardship this year of COP28. And one would think they need more friends in the region, and definitely the Arab Gulf neighbors, certainly, rather than strained relations. So definitely interesting. But I had to ask you that because, we saw quite a bit of volatility around those headlines, right? And, sometimes people who are a bit removed from these situations, geographically or otherwise, tend to think that, hey, no smoke without fire. So what should we be ready for when it comes to OPEC's cohesion and so on? But thanks for that, Kate. Sarah, let me come to you. The IAEA, I always get my tongue twisted around that, recently said that it found uranium enriched to nearly 84% at an underground facility in Iran. And I think that brings it close to the 90% purity, which I understand is weapons grade uranium. Iran played it down, of course, saying that it was not the percentage, but the quantity, which was microscopic. Since then, I have heard generally positive statements from the IAEA with regard to its latest engagement with Iran, and I believe talks are going to continue. My question to you is, do you see this as paving the way for the revival of the JCPOA?
This is actually a very interesting question, Vanda, because Iran is currently tackling many different issues. One, the nuclear issue that we're following, as you said, and then there are other issues at the same time that they're happening in Iran. There were news of Iran supporting and providing drones to Russia against Ukraine. There are news of human rights, significant human rights violations in Iran. Recently, thousands of schoolgirls in Iran being poisoned. So there are so many different things happening at the same time, which makes it very hard, politically at least, for European countries, West and US, to look into a serious rapprochement with Iran, especially because of human rights issues. When it comes to nuclear, Iran's nuclear program, obviously there is a tendency and strong intention to control Iran's or tackle Iran's nuclear program. But what my understanding is, the trends of Iran's behavior for the past decade or more is that they like to engage in a forever infinite negotiations, because when they are in the negotiations, the significant threats against them will kind of froze and kind of goes under pending. There's no significant threats against them. They are on the negotiation table. There's no threats of sanctions or military actions against them. But then they don't also need to commit to any commitment that is regarded or considered for them as a red line. So being in a constant negotiation is the strategy that Iran has always. So they could pull and push, and it's kind of a game they're doing. I'm kind of I would not say that I'm very optimistic on some sort of commitment that goes for long, but rather having an infinite negotiations from Iranian side, that would be the best goal. Because if you look at it under President Trump's maximum pressure, Iran was exporting about 250,000 barrels of oil on average, which was mostly its debt repayment to China. So it was not really any new sales or new income. The moment we had President Biden being elected, Iran's export increased to about 700,000 barrels per day. As now that we are talking, Iran's oil and condensate export almost hitting 1.5 million barrels per day. They don't need really to come into consensus with the West, or they're not worried for any sanctions, because for their New Year's budget, which starts from 21st of March this month, they are expecting a sale of 1.4 million barrels per day of oil to run their budget. And as we are talking, they're just selling about 1.5 million barrels per day of oil, despite all the human rights discriminations and violations inside Iran, support for Russia, and everything we discuss about its nuclear program.
Interesting, Sarah. So you're saying they don't really have an impetus to try and get all the sanctions removed and have more of their oil flowing into the market. The current situation of an endless negotiating game is more in their favor, or is more what they desire, if I understand you correctly.
Yes, and if you see that they're increasing their ties, like what they're doing with Venezuela, starting with helping Venezuela to export its oil by providing their logistical support, their tankers, but then they expanded refinery capacity inside Venezuela. Now they are not only sending condensate to Venezuela for trying with Venezuela's domestic fuel needs, but they're also exporting crude oil to Venezuela. Their relation and ties with Russia, and I think honestly politically they see the world now changing in international relations. If we look at how Russia now is pretty much keeping is a strong stance and alliance with different countries, and I think Iran doesn't see any concern over going into really and solid agreement.
Yeah, sure. Thanks for that, Sarah. Maliha, going back to your reference to China in your earlier. So we found over the weekend, the National People's Congress, that China is targeting around 5% GDP growth in 2023. And it has raised its budget deficit to 3% of GDP versus 2.8% in 2022, which indicates a sort of modest expansion in fiscal spending. I'd like to hear your thoughts on what's your outlook for China's economic and indeed oil demand recovery for this year.
Thank you for that. So China's economic policies actually they changed tact a bit in the last few years. China's focus is domestic consumer right now. I think the market is so used to looking at China's expansion since the 2000s and assumes that it's going to be about infrastructure and urban growth and development. Be that as it may, they do want to support the property market, as that's a big part of the consumer in China right now. But the focus right now is on getting the birth rate higher, fertility higher, to make the average family to be able to afford education, to live their lives. I think they're focusing on the average consumer in China, and that's the main focus of the President Xi Jinping's policy. The infrastructure projects we saw them talk about in Jan and December, we think those are just dribs and drabs of economic growth to help stimulate demand after opening the economy. I don't think they have a massive sort of stimulus spend to boost copper projects, infrastructure. It's a bit of a demand supply situation. So demand will be quite 5% modest, but it's not going to be the economic growth that we used to back in the early 2000s. And I think that's what the people need to focus on. That's not going to be base metal led or iron or steel or copper. There will be demand, but in selective areas, it'll be more consumer focused. And I think we can see that happening and seeing the markets right now.
Yeah, and as you mentioned earlier, we had overnight China's first 2 months of crude imports figures out, and we have a story related to that in our digest today. So 1.3% year-on-year drop in Chinese crude imports in Jan and Feb. I understand that coal imports and iron ore imports ticked up, but all the other commodities imports, including copper, were down. So indeed, as you mentioned, Maliha, it's how does one change the demographics of that country, right? That's probably going to be the toughest for years to come for that government. And on the topic of China, we also have our survey question. Madeline, you could just help throw that up, and please vote on this. What do we think of Chinese peak oil demand? Is it likely behind us? Is it likely to happen in the next 2 or 3 years, or only in the next decade? Kate, let me get back to you. So we've seen sanctions against Russia have been redrawing global oil flows like never before. Russian crude has taken a bigger share in China and India. Arguably the two most important markets for the Middle Eastern producers, the fastest growing markets, of course. And then we look at Russia's decision to cut output by 500,000 barrels per day in March, and it remains to be seen whether they actually do that. And it led me to wonder if that was a sort of a peace offering by Russia to their Middle Eastern peers in OPEC. So again, sort of connected to my earlier question, but do you see any fault lines emerging from the current situation vis-a-vis Russia within OPEC Plus that might be worth keeping an eye on?
I don't think so. I think they've made their position. If you look at what Saudi Arabia said, if you look at what the OPEC Secretary General said in Houston yesterday, they need Russia in order to keep the market in balance. They can't do it on their own. I mean, the whole purpose of coming together with Russia and the other non-OPEC producers was because OPEC's share of the market was actually falling. So together with Russia, they have, 49% or whatever it is of the market. And if the situation changes, the war is over, they need to balance the market again because, ultimately demand for crude isn't going to be as high as it is perhaps today. Yes, we see projections. There is going to be an increase to historic highs, in 2024, but eventually it's going to come down. And that's when you really are going to need, it's harder for OPEC as a whole and OPEC Plus to reduce production, right, just increase production. If you look at the quota that Saudi Arabia was given at the time when we had that big dispute that we talked about over baselines, Saudi Arabia and Russia were given equal quotas of 11.5, which Russia is not producing anyway. So the cut is, it's neither here nor there. The only difference, and we talked about this in London at IEU, because is that there is no swing producer anymore. Nobody is coming in to say, okay, if certain countries in OPEC are unable to produce a quota, somebody will make up for it. It's usually Saudi Arabia, it's usually a bit of the UAE, but that's not happening. So I think that's why the market is, and I suspect price is where it is at the moment today, because there is enough supply. Demand isn't as strong. The second half may be different, but again, China is still, Chinese demand is still an issue. You still have the housing problem sort of, beneath the surface. That's not over in China. You have India importing more Russian oil and ESPO, not just Urals. So, at discount. So that's disrupted the market a little bit, but it sort of seems to have found a certain, it's adapted to the situation, to the so-called crisis. And let's forget, it wasn't a crisis of supply. Supply was always there, especially crude oil. It was more a crisis of prices going up. It was a bit of psychology, a bit of not knowing, the IEA, scaremongering, saying Russian production is going to fall by 3 million barrels a day, which it didn't. So I think the the uncertainty is still there, but the market seems to have adapted to the situation. You see changes even in diesel flows from Russia. Some of it going to Saudi Arabia, some of it going to Fujairah, going to India, maybe re-exported. So the problem is that, as we all know, Russia doesn't have enough storage capacity. So ultimately, at some point, they may have to shut down production, which will tighten the markets a little bit. So it's, there's uncertainty there, and there's uncertainty over the strength of Chinese demand. We all remember when it was double digits. And also the Fed, we were talking about the Fed and interest rates. They have been sending such mixed signals. If you look at Washington, senior Fed officials saying, oh, temper your expectations. And then Powell saying, no, they're going to go higher. So, and you look at the stock market in Europe, the DAX went shooting up, but from a low base, having slumped. So the market is behaving in a very sort of, it's not following historic patterns. And I think that uncertainty is also feeding into sort of doubts as to growth, economic growth, inflation in Europe, etc. But OECD, in terms of demand pull, it's not really Europe. It may be a temporary blip at the moment, but the gas is going to be an issue, maybe.
Yeah, and that's probably for another day. Thanks for that, Kate. Sarah, we've seen cheap Russian crude muscling out Iranian and Venezuelan oil a little bit from the chart, or at least the threat of that happening. I acknowledge that you mentioned earlier that you see that Iranian exports to China have actually increased, but I was also paying attention to news of the fact that a lot of the shadow fleet of tankers, which was ferrying Iranian oil, has been redeployed for Russian crude. And at the same time, we see deepening military ties between Moscow and Tehran, as what you were alluding to earlier as well. So what I was trying to sort of surmise is, is this simply, my first question was going to be, is this Iran's ploy to drag the US back to the negotiating table? But I think you've already answered that question in your first comments. But in this sort of axis between Iran and Russia, who do you think is the bigger gainer in this alliance?
I know that the common answer for that is like Russia is the bigger gainer, and there has been a lot of discussion about that. Yes, like Iran is losing market share or Russia is benefiting, taking the market share. But I would say there's no winner or loser in this game. Both countries are gaining their own agendas. They are getting what they want, and there's not really any loser here. And it's just not something interesting about Russia, just referring to also your discussion with Kate about OPEC, is that Russia, also China, they're masterfully playing with everybody in the region. I would not in a bad meaning when I said playing, but working. We see that Russia is very good and in a very good terms with Saudi Arabia. You already mentioned Russian diesel going to Saudi Arabia. Russia is working deals with India, exporting to India, to China, to UAE, and also same with Iran. So it's interesting because it's very different dynamic from how US US relation with countries, because when you look at US is like either you are our friend or enemies, US and allies.
Yeah.
Exactly. Even though Russia has, you refer to military ties or military cooperation with countries like Iran, at the same time, Russia has nuclear power generation deals, nuclear fuel export to many countries. So with Russia, it's a very multi-dynamic a relation with everybody. And even in the United States, US administration announced the moment the war broke in Ukraine that they are going to voluntarily put sanctions on Russia and not importing energy from Russia. But that energy did not include nuclear fuel.
Yes.
The United States is still importing nuclear fuel from Russia.
As is EU. As is EU as well.
Exactly. And US and EU are importing products from India, which is made from oil that came from Russia. So it seems that when it comes to Russia, and then there are countries like Saudi Arabia or UAE that they are supporting Ukraine, but at the same time don't hesitate to have relation with Russia. It seems that Russia's kind of place, as much as US and West want and Europe want, is irreplaceable. And as much as, again, the general discourse is excited and talking about that how Russia's role is going to reduce in the energy market in the decades to come, because they just excited and they get excited when they look at EU's imports
Going down.
or EU's going down from Russia's supplies get diverse. They forget the fact that, as again we discussed earlier, first of all, most of Russia's flow was changed. Then Russia already since 2014 looking at change of its export flow, especially natural gas, because it needs more obviously complex infrastructural changes to China, the power of Siberia. But something that it seems that no one, especially in the United States, at least where I am sitting in Washington, D.C., wants to acknowledge or think or even ever taught, is Russia's influence in nuclear and important part of being energy transition. Because now that war with Russia happened, Europe's strategy and many countries' strategy for increasing their energy security resiliency is to increase their nuclear power generation for energy transition. And that is going to increase Russia's role. So I think it's just, yes, it's interesting to look into more nuanced factors when it comes to Russia's sanctions and role in energy market.
Absolutely, absolutely. Indeed, I couldn't agree more, Sarah. Okay, so we'll go around the room quickly. I will start with Maliha, as I said, and here's our poll results first. Okay, in the next 2 to 3 years is when we are likely to see peak oil demand in China. I'd say I agree. That's the majority view at least, but quite a bit of split in the room as well. Maliha, in a nutshell, your formula for success.
Wow. Honestly, it's, dedication, passion. But one thing I realized in my career is that, in the massive investment banking industry, there are very few women around on the investment banking trading floor. And I noticed how the men would always stay together and the women would never. And I think we need to be much more collegiate and support each other. So my mantra really has been to support people on the way up. My boss once said, the people you see on the way up are the people you see on the way down. So always helping, people on the way along, seeing true talent and nurturing them. I think that's just really what I do, and hopefully I can impart that from my passion and dedication, I think. So
wonderful, well said. Kate.
I think a combination of luck, determination, and the ability to just stand up. I mean, I'm older than you guys, so I started out, before women, there weren't a lot of women in the business, but I suppose in journalism it was slightly different. But, as a Swiss, I didn't have the right to vote when I first got married in the 70s. Federally, Swiss women were not allowed to vote. And I think we should, think about the women in Iran at the moment who are suffering, the women in Afghanistan. I mean, we've come a long way, but we're also regressing at the moment. But I think the most important thing is to just respect yourself.
Lovely. Thanks for that, Kate. Sarah.
I liked what Kate said, luck, because for most of women, when they are successful, the condition and environment of where they are, it plays a big role. And that's what Kate put it as a luck. Maybe many men don't say luck when it's about their success. And again, I would like to refer what is happening in Iran, just schoolgirls being poisoned in the school for going to school, and women don't have basic rights. But about myself, I usually, again, I'm also not very young, so I get used to not win every game, not to fail, just not to see not winning at every game as a failure, just to stand up and move forward. As again, Kate called it determination. I generally think life is an infinite series of infinite games or challenges. So we might not win one, but the next one will come. So I guess as long as we don't give up and we just stand up and again continue, that's a success.
Well, that leaves hardly anything for me to say. I would just very quickly add hard work. I definitely believe in that, perseverance, And as Maliha said, also, I think networking is something probably women could do better. Know what you want, go for it, and stop comparing. You know, I think that brings a different kind of strength in yourself and keeps you away from negativity. You know, that doesn't matter what the next guy or gal has managed to get. You know, you just be your best self. With that, thank you very much, Maliha, Kate, and Sarah. Wonderful to have you on this panel. Thank you.
Thank you, everybody.
Bye.
Thank you.
Bye-bye.
Thank you, everyone.